Hey all, hope you're having a good weekend. Just Nick here flying solo. Wanted to throw this together really quick. After Broadcom earnings on Wednesday evening, they were quite good. Let's jump into it though, with the help from our friends over at fiscal.ai who had these financials ready to go and uploaded very quickly after the earnings report. For here at Chip Stock Investor, we're using fiscal.ai every day in our research. It's a fantastic platform to get all the information you need on a company's financials, a great hub for accessing earnings season related materials like the earnings call transcripts, and also do search right within the platform. You can search keywords across SEC filings, company filings, and so on. Really awesome research terminal put together by the folks over at fiscal.ai. Check it out, 15% off any paid plan if you use our special link in the description of this video below. Now, let's just use the revenue growth trajectory expected throughout 2026 as a starting point for answering the question whether or not Broadcom is a value. The stock is still down, as of this recording, some 20% from its peak late in 2025. Sales continue to chug along at a very healthy pace in the quarter that just ended at the end of January 2026. $19.3 billion, up 29% year over year. And the outlook for the April 2026 quarter, Q2 fiscal 2026 for Broadcom, completely blew away expectations. Heading into this, you can see there we have highlighted the analyst expectations were for just over $20 billion in revenue. CEO Hock Tan and company said expect $22 billion in revenue, implying a 47% year-over-year increase. And of course, as everybody knows now, this is being driven by the AI semiconductor segment, both the XPUs, the customized accelerator products, as well as Broadcom networking chips. Now, those AI semiconductor sales did double year over year in the last quarter, and they're expecting that to pick up pace and increase 140% year over year in Q2 to $10.7 billion. Within that, the custom accelerators were up 140% in the last quarter, and AI networking was up 60%, and about 1/3 of total AI revenue. Fantastic numbers here, and Hock Tan said they have line of sight on 2027 revenue significantly in excess of $100 billion, and most of that driven from this semiconductor business, especially the AI semiconductors. The non-AI semiconductors now a very small portion of that part of the business, and back in moderate, slight growth mode again. But at this point, that's not all that meaningful. What is meaningful? These custom accelerators. And about 2 weeks before earnings, Broadcom did have this press release talking about this new accelerator product, their 3.5D face-to-face compute. This is a real mouthful, 3.5D extreme dimension system in package, XD SIP. This is powering next-gen accelerator products at their customers, of which they now have 6. The ones that Hock Tan called out specifically in the earnings call, Google, that being the big one, with their TPU products powering Google Cloud, Google Search, and all sorts of other Google products. Meta, who Tan said is still very much on track and getting ready to deploy more of their own XTIA custom accelerators. Anthropic and OpenAI will start deployments very soon. In total, 6 customers, including hyperscalers and some AI companies. Just as a reminder, what exactly is Broadcom helping design for these customers? They fall on the right side of this spectrum. Customized chips for specific optimized work applications. So these customers have very large operations, and maybe they have very large workloads custom to them. And so they have the money, the resources. It makes sense for them to customize a semiconductor, in this case, an accelerator, specific for that workload. Or as Tan mentioned, it actually could extend beyond an accelerator. It could also be some other customized CPU with customized networking. And breaking down some of the acronym soup that was in that press release, XD SIP or 3.5D Extreme Dimension System and Package. What is face-to-face technology? That is when the active circuits of the XPUs are actually facing the active circuits of the I/O chiplets to help lower the latency and increase the bandwidth of those chips and the communication with the HBM. Broadcom provides these little diagrams to help you understand what exactly is going on there. Why do we call this 3.5D? Well, instead of the chips just simply being packaged side by side, that's called 2.5D integration. These accelerators are now being stacked on top of a base die. The accelerators, the XPUs there in red, the little I/O chiplets in green on the base die underneath. And so the active circuits of the accelerator making contact directly with those I/O chiplets to communicate with the HBM in blue, all together in one complete package. You can see that in this slide, also from the same Broadcom video, the whole 3D vertically stacked system, all of it co-packaged on an interposer. The link to this little video, Broadcom introducing this next gen system, customized accelerator system. They even made a little 3D model and took it apart, put it back together so you can see how it all works. Pretty cool stuff. So who exactly is buying these right now? The big one, again, is Google. That is who is picking up a lot of these right now and driving a lot of this growth. But the other hyperscalers also very much in build-out mode right now for their data center systems. Something to the tune of $700 billion in hyperscaler CapEx is going to be spent in 2026. And a pretty decent chunk of that going to the direction of Broadcom. And they think even more coming in 2027 as more companies build out the infrastructure needed for AI inference. So that's what's going on with the revenue, with the sales. How about profitability? I pulled up Broadcom's debt in this slide just because that very much does have an effect on the ultimate profitability of the company. They spent about $800 million in interest expense because of that debt this quarter. A lot of this having to do with the VMware acquisition a couple of years ago. Even so, you can see the free cash flow there in purple coming in at $8 billion in the quarter. Really fantastic compounding machine going on here at Broadcom, operating these days almost like a private equity business, except for, of course, the high-tech stuff as they work on those custom chips for their hyperscalers. What are they doing with that cash? After a couple of quarters of managing that debt down, as well as paying the dividend, they skipped some stock repurchases, but Broadcom management obviously sees some value in their own stock. Almost $7.9 billion in stock repurchases this last quarter, and they announced a new $10 billion share repurchase authorization during the last report as well. Where's the valuation at? Immediately following the earnings update, Broadcom's enterprise value was $1.6 trillion. Our free cash flow estimate based off of the guidance provided during the update is for at least $35 billion in fiscal year 2026, which will end of October of this year. So based on that, currently Broadcom stock trading for about 45 times current fiscal year free cash flow, EV, enterprise value to free cash flow. Certainly not a cheap stock at this point. Some momentum is definitely priced in there, but it sounds like Broadcom's expectation is that momentum will continue well into 2027 as more of those hyperscalers and AI labs deploy more of those customized chips. This is why we continue to say that this semiconductor fueled bull market really is ultimately a 2-horse race, maybe a 3-horse race if you extend it to AMD, but it is definitely NVIDIA and Broadcom that are really moving things forward for these data center operators right now. AMD more on the CPU side, making some good headway on the GPUs, but Broadcom, very much of those two, not just generating lots of growth, but highly profitable growth with well above average industry free cash flow margins. We've owned Broadcom for a long time. We're very happy to continue owning it. Is it a buy right now? That depends on your belief in management's outlook. Can they continue to deliver this massive amount of growth this year and into 2027? If they do, might still be a pretty decent value at this point, especially if those free cash flow margins continue to climb well above that 40% or higher target. They had dipped below that after the VMware acquisition a couple of years ago, but they are very much pushing that back towards 50% again, where it was pre-acquisition. So really great stuff here from Broadcom. In our opinion, we are happy to continue letting this one run. That'll do it for this episode of Chipstock Investor. Make sure to check us out at chipstockinvestor.com. See you over on Semi Insider. And don't forget that fiscal.ai tool, 15% off any paid plan if you use our special link in the description below. See you all next time.